evening, friends. This is Sachin Nachnani, and welcome back to my YouTube channel. Like I do every quarter, I'll be covering the results of TCS, that is Tata Consultancy Services, which has just released its results today, and I'll be covering the results for the year ended and the quarter ended 31st March. Plus, the company has also come out with a final dividend. If you want to know how much is the dividend and when will the dividend be paid, plus some important highlights of the results, but very importantly I will also be covering the fundamental, technical and derivatives aspect of TCS, which no other person covers on YouTube. So keep watching the video till the end, and in case if you're still not subscribed to my YouTube channel, please do so right away and don't forget to click the bell icon. These are some of the important highlights for the year ended FY21 and also some of the highlights of quarter ended 31st March. So Q4 revenue, that is for the quarter ended 31st March, is over 43,000 crores, growth of 4% QOQ. You all know that I only look at QOQ parameter when I look at IT stocks. In case if you want to know the reason, do check out my earlier videos on TCS and you will get the detailed explanation for that. Operating margin or EBIT is 26.8%, a growth of only 20 basis points over the previous quarter. Now this is important. Order book, that is $9.2 billion. This is the highest ever total contract value for TCS in any quarter. Would be close to 69,000 crores. Look at the kind of order book that TCS has generated in the quarter. Now for the entire year, the revenue is over 1.6 lakh crores. Operating margin is just around 26%, and the entire year order book is $31.6 billion. Let me just show this to you in a tabular format for your convenience. So these are the highlights for 31st March, that is Q4 of FY21, and this is for the entire year 31st March. We have already discussed the numbers, so I'm not going to go into the details again. But what you need to see is the profit attributable to shareholders. This is 9,246. Yes, don't get misguided by these numbers, because as shareholders of the company, you and me are going to receive only this amount, which is 9,246 crores. Of course, in this case, there is not much of a difference. Now, although the growth is over 6.3% on a quarter over quarter basis, but the market expectation for TCS was in excess of 9,300 crores. Some of the people were also expecting around 9,400 crores of profit for TCS. So that is slightly disappointing. Although on other parameters, the results are more or less on expected lines. So we can say that this is just about an inline result, except for the total contract value, which is highest in the quarter and which is much higher than anyone's expectation. The final dividend which the company has declared is 15 rupees. Now please remember, this is the final dividend, so this will be paid only after the approval in the AGM. Last year the ex date for dividend was around 12th of June. So this year also you can expect to receive the dividend sometime in the second week of June 2021. So this is after about 2 months from today, you can receive the dividend of 15 rupees. But I'm sure you're not going to be looking at only 15 rupees dividend. I'll be showing you important aspects of how money can be made immediately tomorrow morning. Now, I am not going to bore you with all the details that you can see in this press release yourself also, but just to look at some very important highlights. In the March quarter, that is Q4 21, the company added over 19,000 employees, which is the highest ever in a quarter. So this goes to show the strength of the Indian IT sector. Cash conversion, which is very important. The operating cash flow is 100% of net income, which is again a very good parameter. IT services attrition, that is at an all-time low of only 7.2%. That is only 7.2% of its total employees are leaving the company. And how many employees it has? Over 4.88 lakh employees. Now look at this number. Free cash flow is almost 38,000 crores, and of that the company has returned over 30,600 crores through buybacks and dividend in FY21. So the company is paying a majority of the cash that is generated in the form of dividends and buybacks to its shareholders. Now these are some of the important result highlights. I know you are waiting to cover the other aspects, so let's first go to the fundamental aspect of TCS. TCS is the largest IT company in India, but it is at the moment the second largest market cap company in India. The total market cap of the company, which is the market price per share multiplied by the total number of shares, it comes to almost 12 lakh crores. The highest market cap company in India is of course Reliance Industries, but the market cap of Reliance also is just over 12 lakh crores, so both are neck to neck when it comes to market cap. However, at the moment TCS is at number 2 in terms of market cap. The face value is 1 rupee, the trailing 12-month EPS is over 82 rupees. However, when you look at the valuation on a PE basis, that is price earnings ratio, the number of 39.22 on a trailing basis looks fairly high. If you would have seen my last video, you would have seen that the PE at that time was around 37 times, and now it has gone up to 39 in a quarter. Of course, re-rating has been happening for all IT stocks, and people have been lapping up IT stocks in the hope of higher dividends, higher payouts, buyback in the case of Infosys. But do note that despite an ROE of 37% and all the good news that is being said, the results of TCS don't necessarily justify such a high PE. I'm not saying that the results are bad, but at 39 times trailing PE multiple, there is very little scope for further re-rating. So purely on a fundamental perspective, I am not going to be a buyer in TCS, at least for the moment. This is the chart of Infosys, and the first thing that you will notice is this double top at around 33 to 33.50 level. So till the time this level of 33.50 gets crossed convincingly, ideally you should not be a buyer of TCS, especially if you are a short-term trader. If you are an investor and if you are ready to hold the share for a few years, well, then any price is good for you. But if you are a trader, I don't think you should be looking to buy it over here. And especially if you look at the last two candles, this is the double top candle and this is today's candle. The fall has been fairly sharp. The volumes have been fairly strong and it is retracing from a very important resistance level. In my opinion, if I am going to be trading in TCS, I'll be looking to enter TCS at around 3000 level or below. Yes, I am not going to be surprised if we see the level of TCS over the next few months of 3000 rupees and perhaps 2900 and below also. I know at this point of time nobody is going to believe that TCS can fall to 3000 or 2900, but the chart structure makes me believe that if you have made a double top and if the results are not so strong, there is no reason for investors or even traders to just go and buy TCS. At least you're not going to be buying it for a half percent dividend yield of just 15 rupees for the moment. If you are an investor who has invested in TCS already and you're holding from lower levels, well, there is no reason to sell TCS, but purely from a trader's perspective, unless and until this level of 3350 is crossed convincingly and TCS goes to around say 3400 and trades above it, only then you should be a buyer in TCS if you are a breakout trader. But otherwise, in my opinion, TCS can come down slowly consolidate and come down to possibly 3000 or below levels also. It's not going to happen immediately, but over the next few weeks or perhaps 2 months, in my opinion, this level of 3000 looks a fair bit of possibility looking at the chart structure as of now. Now, lastly, coming to the option chain of TCS, it closed down 2.3% today. Remember, guys, so it is calls heavy, and the highest open interest position is at 3400 call, 14.6 lakh shares, and 12.4 lakh shares at 3300 strike. In fact, the highest open interest addition today has also taken place at 3300 strike, and if you just saw the chart, you know that 33 to 3350 is a very strong resistance level, and that's why you will see that there is tremendous amount of call build up between and at these two strikes. Whereas on the put side, if you will see, the highest open interest is at 3100 strike, which is around 146 rupees away. And the open interest is only 4.8 lakh shares, and compare that with 12.4 lakh shares open interest on the call side. So you can imagine the kind of bearishness that is already built in the price of TCS. Even at 3200 strike, the open interest is only 4.3 lakh shares. So the puts position is not very strong, and I doubt supports are going to be very strong in TCS once it begins to fall. So as a trader, what I'm going to be doing tomorrow morning is, if TCS opens below 32.46, it does not open with a gap up. In fact, if it opens with a gap down, I am going to be a seller in 3300 calls. Yes, I am going to be a seller aggressively in 3300 calls. And if you are only an option buyer, then I would suggest to buy the at the money option between 31 and 3200, depending on wherever the price opens. So let's say if it opens below 3200, you can buy the 3200 put option, and if you want to buy it at 3150 or 3100, you can buy there also, but buy an at the money put option, that is buy the option which is closest to the current market price depending on where it opens tomorrow. Don't go for buying the call option if TCS opens with a gap down. Please note that 33 and 3400 levels are going to be very strong resistances for TCS. So I hope you have benefited by watching this video. In case you like this video, do share it with your friends. Don't forget to subscribe to my channel, and thank you for watching this video.
You can reach out to me on Twitter, Insta, LinkedIn, and of course YouTube.